Hi, I'm Owen, the host of the Australian Finance Podcast. This podcast is proudly sponsored by BetaShares, one of the leading providers of ETFs here in Australia. Serving thousands of financial advisors and over 1 million investors, BetaShares manages tens of billions of dollars on behalf of investors right across the country. I'm proud to partner with BetaShares on the Australian Finance Podcast, Australia's premier financial podcast, because there is great alignment in the long-term philosophy shared by both businesses. I hope you enjoyed this episode of the Australian Finance Podcast. Cameron, welcome back to the show.
Oh, and great to be here.
Today we're going to be talking about cryptocurrencies, but I don't know if that's a bit crude to say because we're going to be talking about Bitcoin primarily and a little bit of Ethereum because BetaShares recently came out and launched 2 ETFs in this space. And I think this is really a sign for people that maybe we can talk about this, maybe you agree or disagree, that part of the market, which has often been kind of shunned by traditional finance, is now really coming to the fore, and people can do it with ease. They can invest with providers like BetaShares or whoever that they're familiar with, and they can do that in the same place they buy their shares and their whatever, all in one place. So that's really handy for people. I guess we are sitting here in late February 2025, recording this. Bitcoin's just come off a tear of a year. And there's been a big political change recently. How are you seeing this whole makeup, this asset class? Let's just start there and then we'll drill down.
Yeah. So I think, the story, and this dials into the change of administration in the US, but the story over the last couple of years has been really about more mainstream adoption of cryptocurrencies, particularly the main ones such as Bitcoin and Ethereum. If we sort of think about these assets, there obviously has been questions at various times as to their longevity. But with the ability to access something like Bitcoin through an ETF versus what was for retail investors, somewhat easy to access, but for institutional investors came with a lot of challenges. That ability for institutional investors and corporates to invest, to know that the regulatory environment is more accepting, really does change the game and legitimizes these particular assets.
Because we've just come off a Trump victory, and I think there's a thing called a Trump coin. I'm not as familiar with it, but I know that between him and kind of the supporters like Elon Musk and these types of things, there seems to be just a political, I guess, reception there now, let's say, where the governments of Western countries seem to just, it's not necessarily endorse it, but they're just not necessarily trying to outlaw it like potentially in the past, right? And therefore, the regulators of the financial systems and the big ETF providers, the stock exchanges, all these big actors around the world kind of want to get a slice of it, right? They want to get involved, want to help people invest and do so in a familiar way.
Yeah. I mean, if you look at the US as really sort of the case in point, the previous chairman of the SEC, who were the regulator who would probably most closely be aligned with, with crypto, Gary Gensler. When he originally came into office, people thought that he was going to be pro-crypto, but he, in some ways, really muddied the waters in terms of the regulatory environment for actors in the crypto space, crypto exchanges, and that was really problematic. He had a lot of enforceable undertakings against some of the main players in the industry, and we also saw that as a result, a lot of traditional banks really iced out the crypto providers. So it made it very hard for, say, a crypto exchange to get traditional banking services. So to connect the traditional finance world to the crypto world. Now, Trump, came in as a pro-crypto candidate and said he was going to toss out the SEC chairman and put in a crypto-friendly chairman, reduce the regulatory burden. And I shouldn't say reduce, but really create a regulatory framework. That was really the key. Right. And that's what the industry wanted, was they wanted to know what the rules were. They didn't care if some of those rules were somewhat draconian. If you have that certainty as to the regulatory environment, it just opens the door. And that means that, all sorts of, institutional investors, and I said before, corporates, will become more accepting of the asset class and will be less risk averse as to deciding to, buy and hold these types of assets. So that's really the change that we saw with Trump coming in. Of course, before that, almost begrudgingly, the SEC allowed for the launch of the first US cryptocurrency ETFs, Bitcoin ETFs. And this, we saw significant demand right out the gates, and they've actually accumulated quite significant assets. And so, that opening up for both retail investors and corporates through that angle, together with now what's I guess a more friendly or more likely to be a more understood regulatory environment, really does build on that case for broadening adoption.
For folks that aren't familiar, the reserves of the governments buy a lot of assets. It's, I'm sure, somewhere sitting in a vault. The Australian government owns a shed load of gold, maybe multiple sheds, because it protects their currency or helps them protect their effectively economy. And so them getting involved in this type of world is a big move. I've got to admit, Cameron, that over the time that I've been running Rask, I started off as very negative of Bitcoin generally and cryptocurrencies just because of what it was being used for at the time. And as that has matured, I've copped more and more criticism for being negative. And we're at a point where I've still lost my passphrase to get into my Bitcoin and my Ethereum and lost all control of my NFTs. And I sit here today thinking this is easily, obviously one of the best performing sub-asset classes is probably what I would call it in the world. Last year, got the notes here, Bitcoin rallied 125%. So this is in 2024. That's obviously, the share market did really well.
Yep.
But it was no shade on that. This is a question that is kind of, has always bamboozled me a bit, is why does Bitcoin go up? Why does cryptocurrency work? Yeah.
So, let's just talk about Bitcoin. And it really is driven by that adoption case. And you mentioned before about governments holding gold. And it is interesting, if you look at the way that governments have managed any holdings they have of cryptocurrency. So you talked before about maybe the shady past of cryptocurrency. And typically what governments have done is when they've actually managed to get hold of Bitcoin as, or other cryptocurrencies as a result of proceeds of crime, when they've managed to take that off the bad guys, they've typically sold it into the market straight away. So get rid of those assets. What Trump has said is that he will accumulate that cryptocurrency reserve. So that's interesting in terms of a shift there and thinking from governments to really own these assets. Thinking about the drivers of performance, and again back to just Bitcoin to keep things simple. The limit in terms of the number of Bitcoins that are going to be issued in ever is 21 million Bitcoins. So that's a scarcity, sort of that we're going to see in this asset class. You mentioned that you'd lost some of your private keys, and what it means is there's actually going to be less of these crypto assets in circulation, so further scarcity. A lot of the questions that people have about Bitcoin is it's not a tangible asset, it doesn't create income, but there are plenty of examples of assets that are not tangible, like gold, like physical gold. An example might be intellectual property rights, right? So I think the point is that Bitcoin, the primary use case is as a store of value, an alternative to gold, if you like. The scarcity, or the fact that the supply of that is limited, creates that ability for people to trust it as a store of value. And so that is where it's seen as, sometimes people refer to it as digital gold. And what is driving higher and higher demand is the ability for more, economic and financial actors to buy this asset class. Now, I will note that in terms of the role of Bitcoin and how it's performing, it is evolving over time. So originally it was extremely volatile, and there was probably a high chance that Bitcoin would sort of go to dust or be worth zero. But as you see more and more acceptance, the volatility is lowering, and the chances of it, essentially remaining a relevant asset class increase. And that's sort of interesting. I will say that right now it is relatively correlated to equities, so it's still not quite the same as gold, but that's going to change over time.
It moves in the same direction,
Basically, if we look at how Bitcoin's performed over the last year, typically it has performed strongly when equities have performed strongly, and sold off a little bit when equities have sold off. So, we would say at the moment it's sort of behaving a bit like a risk-on asset, but I think you'll see that evolve over time, and it will change. And probably, form more of a gold alternative rather than just be, if you like, a proxy for the, high octane proxy for the share market.
Yeah, because people might be thinking, well, if Bitcoin did 100 and whatever and shares did 20 or 10 or whatever it was, why don't I just buy more of that one that does really well instead of this one? And that's what, to be honest, that's what some of the logic has been. But there was something that I emailed you about yesterday, which was a really big movement from probably like 3 to 4 to 5 years ago, say, which was, and shout out to my brother-in-law who continuously repeated this to me. I think one day we were away on holidays in bed doing some work one morning, and he's kind of come in and just gone, you need to get off zero, which is this phrase for people that are unfamiliar of like, even 1% exposure is better than none.
Yeah.
So because his rationale was, well, if I'm wrong, you lose one. And if I'm right, then at least you've got some. So he was right. So shout out to Andrew on that one. But that's a big movement too in terms of more established investors thinking, oh, well, I don't need to bet the house on it, literally.
Yep.
I can just have some exposure. That way, if something does happen where it keeps growing, at least I've got something.
Yeah, 100%. I mean, your initial early adopters were those true believers who would essentially invest maybe even up to all their assets in, very strong, hold like your life depends on it sort of belief, right? And, I think, other investors were never going to sort of take that bait. And, that's sort of where we've seen that movement. And just to, pull some data for you, there is actually, you can look at the data of SMSFs in Australia. And I don't know if you want to have a guess, but there's a certain portion of SMSFs that are 100% Bitcoin.
I wouldn't know what it was. I don't know. I wouldn't have a clue.
Yeah. So it's about 0.4% of SMSFs have 100%
Self-managed
Bitcoin.
supers. Wow.
Yeah. So risky for your retirement. So that's 2,500 SMSFs.
Have 100%.
100%. Yeah. So that's probably something I personally would never look to go down that path. But if you look across the broader pool of SMSF assets, about 0.2% of all SMSF assets are held in Bitcoin, which is that talks to that point of getting off zero. And we work with a US player in the space, Bitwise, who I'm sure we'll talk about. But they've done a lot of research in terms of portfolio construction and thinking about this challenge that your traditional investor has with their traditional portfolio of stocks and bonds, and thinking about how much Bitcoin you may add to that portfolio. And what does that do to the potential return, but also to the potential risk? And it's really important to think about risk, not just from the standpoint of volatility, but also, risk of drawdown, risk-adjusted returns. And you're right, even a very small allocation to Bitcoin, at least using the historical data, and it would be a good indication sort of for going forward, certainly on the risk side, but provides substantial, potentially substantial upside in terms of risk-adjusted returns. And it's kind of the way I think about it too. I sort of think about this as it's that whole point, as you mentioned before, if I'm prepared to risk 1% of my capital and say that there is a chance that goes to zero with this asset. There's a chance it's non-zero, the chance of it going to zero. But there's also a chance of it going up, say, 5 times or 10 times. It's that asymmetric bet. And I'm not prepared to put $100 or 100% of my assets into that bet because I don't want to lose everything. But I'm prepared to bet $1 out of 100 because I know that upside skew is pretty strong. And, I like derivatives and I like to think of it as that sort of play. And it's really about just deciding, how much, if that's my view, how much do I want to put of my portfolio in that asset class? And, if I can do that in an ETF, the really good thing for me is that if that asset class grows substantially so that if it runs up and it becomes, say, if I'm comfortable with 1% and it grows to be 5% of my portfolio, I can easily rebalance back down to the level I'm comfortable with using an ETF and rebalance into the other assets in my portfolio.
It's really interesting. I was chatting, we had a question on our Investors podcast about people like being really worried about debasement of currencies, which is another like kind of out there. It's on the spectrum of ideas. It's like on one of the ends of the bell curve, so to speak. And it's kind of like, well, the US dollar is not going to be that powerful anymore. What are my alternatives and all those types of things? And the response to that question, Cameron, was effectively like, you don't need to have that kind of view in order to invest in something. You can be, that could happen.
Yep.
Maybe it's not that likely. Maybe it is, but I can have a little bit of that just so I covered that base. And that allows people to sleep a bit easier at night. And of course, like if I could go back in time, I wish I could just put 1% of my, assets into Bitcoin, of course. In terms of, you mentioned the ETF before and how it's constructed, right?
Yep.
We actually had someone come up to we had a bit of a meetup in Sydney last week. I don't know if I told you about it, but we had a bit of a meetup in Sydney last week and someone came up to me and they were talking about the launch of the ETFs, but in particular the Bitcoin fund, and they were trying to tell everyone else in the group how it all works. So they were unfamiliar. But this ETF that's here in Australia invests in another fund that invests. Okay, so can you explain the mechanics of that?
Of course. So we've got two ETFs. So the BetaShares Bitcoin ETF and BetaShares Ethereum ETF.
Yep.
I'll just talk about the Bitcoin one, but the Ethereum one, the same rules apply. So if you're an investor and you're buying units that ETF on the ASX, what that ETF is doing is it's investing in an ETF called BitB or BITB, which is an ETF issued by Bitwise, who have been a long-standing partner of BetaShares in the US. Mm-hmm. These are one of the leading crypto asset managers. In fact, they're the world's largest crypto index asset manager. Mm-hmm. BitB is, I think it's about the third largest Bitcoin ETF in the world in terms of assets. And, these guys have been through the up and the down cycle. We have a very strong, long-standing relationship with them. And they are what we consider really, best in class in terms of the way they manage risk around running a Bitcoin ETF. Now, what's really important when you're, running that ETF is, the risk or security around Bitcoin and ensuring your assets are quarantined and are safe. So we invest in that ETF. That ETF then goes out and will, transact in Bitcoin. And that Bitcoin is then moved into cold storage, is a term that is used, where the custodian is Coinbase. Now, Coinbase are the world's largest custodian of crypto assets. They're publicly listed. They're highly regulated. And they have plenty of capital. All these things are really important. So when we saw growth in, if you like, crypto ETFs, most providers went to Coinbase. They're gold standard in terms of custody, or the party that everyone chose to work with. Now, the great thing about the ETF is that it means you don't have to worry about a lot of those risks around trading on a crypto exchange yourself. So if you're trading on a crypto exchange, you might worry about the risk of them being hacked. And we saw a recent example. The second largest exchange in the world was recently hacked. You don't have to worry about recording your private keys, which I think you just mentioned before. And when you think about that as an individual, you're probably going to save or write down that private key somewhere. The way that the operational processes that Bitwise use essentially shard that private key and require multiple authorizers who only have part of that code. So it's about building systems and processes that ensure that you have institutional grade, custodial arrangements, so that that the underlying holding of Bitcoin or Ethereum is held in the manner which is going to, ensure the greatest chance of safety and security.
Yeah, right.
And that is why we chose to partner with them, and really pleased to do so. And really we can. The great thing is they've got a great team, and they're really able to talk about this asset class, and we can really lean into that. So it's been really, really good.
I've got one question for you. So this is something that would probably be, some of the diehards would say, well, wouldn't I just go and buy the Bitcoin myself or the Ethereum myself? Like what would you say to that? Yeah.
So you could do that, but then I guess the two things are around, are you going to set up a private wallet? Are you going to, know where that private key, do you need to worry about making sure that's securely saved or stored somewhere, that you don't lose it, for example? That's one aspect, is that sort of aspect of things. But, if we think about this more broadly, I think most investors, when they're looking to invest, ease of access is key. Being able to manage your portfolio in one place is really, we're all time poor, right?
Yeah.
Using multiple platforms to manage different parts of your investment and trying to transfer money from one platform to another, like it's too much for a lot of people. the great thing about having this in an ETF form is that, look, you're likely to have all of your other investments within that same share trading account. And it means you can move your assets quite easily. You can see the price on market any day. And there's also direct records to show the underlying Bitcoin held by that fund. So a lot of points around ease of access and the timeframes for transacting and the ability to get your money back and invest in something else. It makes just for a much more convenient approach to investing. And it means that you're not sort of just got this ring-fenced, crypto exchange account over here with a different password and private keys that, aren't necessarily the same as your share trading account.
Actually, it makes, now that I think about it off the top of my head, like you could just go buy shares, but people use an ETF. Or you could just go and buy, I don't know, gold if you really wanted to go down to the mint.
You can.
Yeah. But people don't really do that, do they? Well, some people do, but...
Gold bugs do.
Yeah, they go and bury it in their backyard. Yeah, but like most people don't, right?
Yeah.
And that's why ETFs have become such a big thing. I've only really got one final question for you, because there's plenty of literature on the website for people to go and check out. I'll put a link in the show notes to the Bitcoin and Ethereum ETFs. But like, it comes back to the investment idea, which is people can't always like kind of put I guess it's like what's the old saying, like a square in a round hole or something like that, where you've got like one side of your brain's like, well, shares are investments because shares pay dividends because they grow and they're actual businesses. Crypto, on the other hand, is kind of like not those things. So like, how do you think about it just broadly as an investment, I guess? Yeah.
So I guess I'd sort of equate it back to the, do I think this asset is going to be legitimized by broad adoption? Because I guess to draw an equivalent, like gold has long been used as a store of value since the time of the pharaohs and beyond. And, the reason why gold has the price that's nearly, $3,000 an ounce at the time of recording is because it's generally accepted that this is something which is, I can buy and sell as a generally sort of held principle that this should be something that I can rely on and will perform in different market environments. It is really, the story of Bitcoin is, I think, as a store of value and is about acceptance as a store of value or alternative to gold in the long term. That story is evolving, and you mentioned some of the other potential arguments for Bitcoin around debasement, which are related to that digital gold concept. But it's not an asset that produces income. Neither is gold. It's also not a tangible asset. It's not a physical asset, and a lot of people are, probably somewhat beholden to the concept of needing to touch and feel an asset, or at least understand that a company exists in the physical world. But as I said before, there are plenty of assets that are not tangible, and they can be really strong performing assets. So it is about that adoption story, and it is about the fact that what we are seeing on the ground is a broadening out of that adoption. And I think with more regulatory certainty, we're going to continue to see that asset class broaden out. It's, the total, if you like, market capitalization of Bitcoin is just under $2 trillion. That's a fraction of the total outstanding gold sitting in gold vaults around the world. So it gives you some view as to the potential further upside in terms of growth, albeit obviously with some risk if we don't see broadening adoption, but we could see this asset class continue to grow quite substantially.
Interesting. It's quite interesting because like we, as I know BetaShares is like focused on educating people on the core principles of core and satellite. You can have this portfolio that's got track records for decades or something like that, shares, bonds, cash, gold, whatever. But you can also have these kind of, let's call them other bets, or the satellite of someone's wealth, where it's maybe a smaller amount of money. And I think that's where this is really interesting. And at least for me, I kind of like, I'm conscious of not just being fully, going with momentum in this respect and just being all in on Bitcoin all of a sudden because the price has done really well. I remember when I originally said no, it was $4,000. And what's it like? I don't even know what it is now. I don't even want to see it, to be honest. But I think that for most investors, as that adoption keeps rolling off, there is more and more of a case to be made.
Yeah.
To the extent where to be honest, I'm even considering it. It's like, well, may as well have some exposure.
Yeah. I mean, I think the way you talked about it before is really important. So we've got asset classes that have been around for, hundreds of years in things like bonds and equities. And when we're thinking about building a portfolio, understanding the relationships and the drivers of these asset classes is quite important for the core.
Mm-hmm.
And then if you were going to look for something which is somewhat, new and novel in Bitcoin, you might be thinking about that as a satellite position where you're taking a appropriately sized position based on what you think are the realistic chances of it performing strongly or potentially not performing strongly. So it's something which is evolving as an investment product, and it will continue to evolve. But it's that small allocation for you, depending on your views, might make sense as a satellite.
Yeah, well, I like it. Well, Cameron, thank you for taking some time to join me here in the Melbourne office and
thanks, Owen. It's been great.
And talk about this. I think there'll be a lot of questions that fall out of this. There is a good video of you with a very crisp haircut, I might say, available on the BetaShares website.
Freshly cut.
Yes, freshly cut indeed. So that's all up there. There's plenty of literature which I'll link to as well. So once again, mate, thanks for joining me.
Thank you, Owen. Great to be here.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.